Welcome to TradeTheNBI.com. This is John. This report is for the 23rd. Well, we continue to get additional red candles as we've now broken below the ABM yellow, right back down to the lows of what we had from the previous day. You can see that from the DOC breakdown here as the red long-term buyers and that just begin to fade. And something we talked about after the initial push with new fund money coming in. And again, there'll be more at the beginning of the following month. The question is how much of that, and we talked about this before, it doesn't take very long to fill out all the gains and just, wipe them out rather quickly. This particular point, though, we haven't quite dipped below the red line on the ES or the S&P 500. The NASDAQ already had made that move. We've, looking at the second day of starting into the red lining, it was a much more exacerbated decline within that and pretty much wiped out all of those gains from the beginning of the month, where we started pretty much right here and a little bit further, and it would completely fill that in. So again, NASDAQ is leading the way. And this would actually give us the crossover on the declining power mode too, which would signal more decay. So not a shock within that given reading. It's caused a little bit of bump in gold, which is a good opportunity to flip over to Bitcoin. Some people say, oh, well, cryptocurrencies are not going to follow, algorithms and that. And I talked about this back when they instituted futures for Bitcoin and that, because it was a significant thing at that point, because what it meant was you were going to get the similar behaviors. It was the beginning of the transition to a more traditional model, and that was a good indication that Bitcoin was going to be the preference. Now, what I marked here as well, of course, we have positive extremes that go all the way back to right here in the 49.5 range, but then you got real serious developments right there at the 50K. It happened again when we got up right around 50, just below 52. And then on this most recent breakout, right here. So once we get the sell, obviously the 53,000 from the peak was the first. We were in a clear DOC spread from right at the marker. Nothing's changed with that. Yes, we had steel rising at this particular point, but you had no dip of orange. By the time you did get the orange, you'd pretty much peaked out with short-term buyers and that, and then you get the immediate rejection. So even if you waited until you started to see that separation fade, became pretty clear, and then we've just cascaded lower, filling all of these, as well as even the dip below the red line, which you're seeing take place right about here. And so the behavior completely consistent. This is the exact same thing we saw with GameStop, behaving pretty much per what the algorithm. So despite the news and things that you hear, they're still pretty orderly. And that's an important aspect to remember, that within what some people see as chaos, we just see as a normal fillback of an extended move from an algorithm. So take that with, whatever you will, but nonetheless, it's still definable, and we're able to point it out pretty clearly. And again, this is the euro situation where it's also elevated simply because it benefits the Fed. And, now everyone's back to talking about inflation and stuff because, again, the only way you're going to eliminate or at least effectively reduce the idea of the debt that exists is to inflate out of it. Otherwise, you just have to cancel debt, which nobody likes the idea of that because it makes it seem like you don't want to pay, but inflation is just a bit more insidious because it just wipes buying power out of people. And this is something that's been going on for quite some time. And when you think about what a dollar used to buy versus what it does today, the numbers are pretty clear with that. From a trading standpoint, intraday, it's pretty straightforward. We ended up with our declines, and again, we had some of these previous algo levels that have been set up with positive extremes, some of the earlier ones as well. And then even as we started along the day, whenever a positive extreme would pop up, they were like usually right in between the ranges of what we already had seen for some time. In fact, we had this one that was pretty much identical to the previous one that took place within the same day setup, and then you get to the extreme carry-throughs, and it just makes it clean from a defined standpoint. But the fact that we based on some of these other ones that are from previous time is just an indication that they all get their meeting point, so to speak, whether it's now or in the future. Again, I've talked about this where the idea of clearing stops in that short money, it's a concept that they really take advantage of, because that's what their job is to hunt it. It's like free money. So when the short DOC spread came, the first one initially started right there on rising gold. So a little bit longer before you get a secondary one. This time gold has turned around on the shakeout right here. It's actually begun to fade. I can make that a little bigger so it's easier for you to see. So rising, and then boom, plateaus. And that's not to say that this first one couldn't do it. You are coming off a complete reset from a steel standpoint at that stage, and it was just a couple of bars later before it finally pops up again. And this time though, you even have magenta below the 15 line, and yellow had already crossed below. So whether you started with the first one or the second one, I'm just a little more cautious when you're seeing the rising gold. The fact that you had such an extended dip of the shakeout, okay in my mind. But this one filled all the way back down to exactly that previous algo at 73, and kind of based along there for a little bit. The clearest point would have been this step down right here, because you had no reset for all this period during when that first orange came, and it wasn't that much of a dip below. It just was testing the strength right there. But we dipped below the zero, popped back up, and that's when the orange came down, and that was clearly pushed back up. The only thing was it was under all positive extremes down here. And so what have we done? We filled all those positive extremes back in, and that's when the carry-through started in this post-market period right now, as we head to the 52 range within this little soft period, and quite a few below the red line. So starting a little bit of a basing right there, but with this orange already turning up, doesn't look like that's going to make any kind of move at this particular point. All in all, I think it's good to see this because it gives you a real representation across markets that the behavior is the same, and really the market is strongly under the influence of computer modeling, and it's just knowing that makes it easier to recognize we're on the right track with it, and just keep taking advantage of what we see. So we're doing well, as they say. As always, though, I will put up anything relevant on the Skype chat. Trade well.